Volatility. Oh my gosh, volatility is like a stock that goes way up and goes way down. And here's why you want to embrace volatility and why volatility is your friend. Volatility gives you more income when you sell options, number one. And number two, probably equally as important, volatility means that it goes up a lot and it goes down a lot. That means this. If you sell a put, you're committing to buy a stock that you like anyway if it goes on sale. If it doesn't go on sale, you don't buy it either way. You get paid premium to make that commitment. Now, a few days ago, I posted a video here on YouTube about a trade that I personally made. I have a bunch of Coinbase. I sold a Coinbase $325 put, meaning that I would buy Coinbase if the stock dropped below $325 per share. Well, guess what? On Thursday, it dropped a lot. It dropped like a rock. Did I freak out? No. A lot of options trading is your emotions and controlling your emotions. You have to understand this basic premise about the stock market. Stocks go up a lot and often, and stocks go down a lot and often. You have to embrace that volatility and get paid for that and not freak out, not jump off the bridge when your stock goes down. On Thursday, Coinbase went down like 6% and it closed a little bit over $328 per share. Now, was I freaking out? Absolutely not. Here's why. I sold the 325 put. I got paid $330. I did that trade just a handful of days ago, and I did it for a couple of reasons. Number one, I like Coinbase. It's got volatility. I believe in cryptocurrency, in Bitcoin long term. I understand that if it goes down, it's gonna go back up again. I got paid $330, which I keep no matter what happens. And because I have a lot of Coinbase already at a higher price, if I have to buy the shares at $325, I'm fine with that. Why? Because I would be averaging down my cost. Now, guess what happened Thursday, just a handful of hours after the market closed? Coinbase started trading at like $338. It went up like $10 like a couple of hours after the market closed. This teaches you guys this, and I can't stress this enough. Again, stocks are always volatile. Stocks don't go straight up to the moon, and they don't go down to the floor unless they go bankrupt or something. That's why you have to trade good companies, right? Stocks are volatile. The stock market is volatile. Embrace that. Don't be afraid of that. Now, Friday, when the market closes, if Coinbase is less than $325 per share, I'm going to buy 100 shares. I'm going to be fine with that. And if it's not under $325, I'm not going to buy the shares, and I'm going to be fine with that too. So anyway, I hope this video helps teaching you about volatility. Embrace the volatility. And guess what? If Coinbase closes on Friday at like $310 per share, what is Michelle not going to do? Michelle is not going to roll that contract. What does rolling mean? Rolling means I buy my contract back, take a loss, and then sell another one further out into the future. No, I'm just going to take assignment on the shares. I know Coinbase will pop back up, and if I have to buy the shares, I'll sell a covered call on them on Monday. Anyway, I hope this helps. Listen, guys, subscribe to my channel. I am literally putting up a video each and every day for 1,000 days. Put a comment down below. Tell me what you're trading, what you like to trade, what you want to see a video on, and happy trading.